Hey traders, whether you just start out or you're dipping in the markets every day, you have probably heard people throwing around terms like RSI, MACD or moving average, like they are secret weapons. But how do they actually work? Hi, my name is Sarjoghian, and today we are diving into the 6 most common trading indicators that almost every trader uses. And most importantly, how to use them effectively in your own strategies. Make sure to like, subscribe, and let's get started. The moving average, probably the most used indicator in trading. There are 2 main types. Simple moving average smooths out price data over the specific period. And the second one, exponential moving average, gives more weight to the recent price so it creates faster. The 50 days and 200 days moving average are super popular for spotting trends. When the short-term moving average crosses above the long-term moving average, it's a bullish signal, which is called golden cross and considered buying signal. When it crosses below, it's a bearish signal, which is called death cross or selling signal. Usually traders use those 2 combinations with the third lines and price actions for confirmation. Next up, the RSI, or Relatively Strength Index. It's a momentum oscillator that measures the speed and the change of the price movements. RSI ranges from 0 to 100. Above 70 equals overbought, could signal a potential pullback, and the below 30 equals oversold, possible bounce incoming. How to use it? Look for divergence. If the price is making highest high, but RSI is making lower highs, that could be the trend's reversal signal. Works best in the range-bound markets, not trending one. The next one is MACD. This one looks complicated, but it's gold when you get it. MACD is a trend-following momentum indicator. It consists of the MACD line, which is difference between 12 days moving average and 26 days moving average, the signal line, which is non-days moving average of the MACD, and the histogram difference between the MACD and the signal line. How to use it? Crossover strategy. When MACD crosses above the signal line, it's considered bullish or buying signal, and when it crosses below is considered bearish or selling signal. The histogram shows the strength of the momentum. Wider bars means stronger moves. It is recommended to use MACD with the price action for a stronger confirmation. The 4th indicator is Bollinger Bands. Think of Bollinger Bands like a volatility bubble around the price. There is a middle SMA line and 2 bands places 2 standard deviations above and below. The bands contract during the low volatility and expand during the high volatility. How to use it? When price hits the upper band, it may be overbought. When it hits the lower band, it might be oversold. Look for the Bollinger Band squeeze. When the bands tighten up, it often precedes a big breakout. The key point is that pair it with the volume or RSI to avoid false breakouts. The 5th indicator is Stochastic Oscillator. and other powerful momentum tool. The stochastic oscillator, it compares a particular closing price to the range of its price over time. Values range from 0 to 100. Above 80% would be considered as an overbought, and below 20% would be considered as an oversold. It has two lines, the key percent, which is the fast line, and the D percent, which is the slow line. How to use it? When the key percent crosses above D percent in the oversold zone, it would be potential buy signal. When the key percent crosses above D percent in the overbought zone, it would be considered as a potential sell. It works best in the sideways markets, not strong trends. The last indicator is volume. Now this isn't a line or oscillator, but it's probably the most underrated indicator. Volume shows how much of an asset was traded during the given time period. How to use it? Rising volume during the breakout equals a stronger signal. Low volume would be the cautious. It may be a fake out. If you use the volume plus candlestick patterns, it is going to give you powerful confirmation tool. The extra tip to it is to use volume profile or unbalanced volume for more advanced setups. Now that we know all about the indicators, let's recap real quick about the indicators. The moving average is for spot trading and crossover. RSI measures momentum, find reversals. MACD follow momentums and confirm with the crossover. Bollinger Band, watch volatility and breakout potential. Stochastic Oscillator for spotting turning points. And the volume confirmation is everything. The real secret, no signal indicator works alone. Combine 2 to 3 for the best result. Test them, learn them, make them part of your trading edge. If you found this video helpful, hit that like button, subscribe for more, and tell me in the comment what your favorite indicators and why. Stay smart, stay consistent, and as always, trade safe. See you in next one. Thanks.